following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. We're going to immediately look at the S&Ps here. Talked about a strategy when we did our webinar the other night. Just to get right into it here. Talked about a situation where it might be appropriate at times to not get shaken out of a trade. If we're coming up into major inflection points and you're expecting a bigger move, we hadn't had a lot of coinciding good news from the breadth on the internals. Had the leaders kind of disconnect from that lately, but those are ultimately going to kind of arbitrage yourselves back together. And we talked about selling some futures and buying some in-the-money calls around the 2080s. I want you just to kind of examine that, look at the charts. If you got Thinkorswim, a couple other platforms, you can kind of examine how this thing would unfold. The VIX is just creeping up just a tad here. And the premise on doing this type of trade from the short side with buying the in-the-money hedge, so to speak, it's a little bit more appropriate than doing it on the downsides, because when the market's coming down, if you're trying to buy futures and buy in-the-money puts, market pops up. A lot of times those puts will, VIX, comes down. A lot of times those puts will just completely, that you bought as a hedge, completely start evaporating quickly. So this is kind of, you get best of both worlds when you do a strategy like this on the short side. So again, might want to examine this trade, just kind of watch how it unfolds. You got unlimited upside and an extremely killer hedge. If something goes wrong and the market keeps climbing, you're just kind of sitting back laughing, not really losing anything for the most part, because your deltas are so high. So again, just want you guys to kind of examine that. And what do you do now with these S&Ps? We're going to cover a couple of other things that we need to talk about, and then come back to this and maybe make some assessments. I was kind of shocked and amazed that the market was holding up as well as it did yesterday. And actually closing, let me see where we closed here. We closed at 2090, 2091 yesterday. Let's just kind of surf around a little bit here. Had a lot of stocks coming out with some news, Apple being one of them. And we talked about Apple. We talked about trying to get back up into this 99, 80, 100 whole number psychological barrier, if you will. Any retracements back up in there. I was kind of disturbed that we couldn't get Apple to rally back up into there to get some shorts off. Here's the action yesterday. We kind of caved in, came back into 99, never got up to 100, and that was disturbing. But when you have something like this, you want to have a place to play defense, and that was kind of the defense area that we could focus on. And it just didn't happen, and that's the way the ball bounces sometimes, and sometimes you just don't get to trade. So again, it's very difficult to short a stock in the hole like this from a probability standpoint and psychological standpoint. You got a lot of people. The market is opening down there to try to find buyers. So you've got to remember that. And it's not like, hey, wow, Apple's got bad news, stock's down, let's short it. Doesn't work like that. We've got to have something to play defense against, and 99, 80, 100 was that. Didn't get close enough to start getting into that trade for me. Let's take a look at the U.S. dollar. And again, Tom's been just spot on this one. I think he called the initial move around 100 on this. So this has got some points in it now. And yesterday we kind of bounced off this 94.13. I want to show you this on the daily. I'm sorry, this past week. Not yesterday. That was the notes yesterday. We're going to talk about the notes too. But we've used this. Now we're breaking down on the weekly and the daily. This is damaging. Technical damage, especially a Friday close below this area. Then you're going to be looking at this like an Apple situation and waiting for retracements back up into 94.13. What's causing all this? We're going to keep surfing around a little bit. And yes, it rained probably an inch and a half here last night. It was crazy. And now you check these weather channel apps and all that. I mean, they're changing the percentage, like from 80% to 30% and back and forth every hour. You get it's real time, and you used to get hey, it's 60% chance of rain today. Now it's intra hour, and they keep flip flopping. It's disturbing. So we looked at the dollar. I want to take a look at the notes. We're just going to hit the usual suspects the first segment. And this is why, again, the S&Ps hit that inflection point up top. This is the notes coming down into that inflection point this week at the same time on the bottom. So we got let's see, into this weekly, we reached a low of 129.02. The unfair low is 129.02. So if I kind of expand this out, you'll see it's not painting it exactly right, but it's very close there. But it is 129.02. Yay, the profiles worked again. Seriously, it was kind of an interesting situation with the S&Ps at that inflection point and the notes kind of making these higher lows at the same time and coming back into support. Looking at these things generally from the long side, Joey and I and Tom have been talking about that. So again, here's the daily. So we've bounced off the bottom of the weekly unfair lows. We've got to some target areas. At the same time this was happening yesterday, we had that yellow peel back, which is in the scanner. I'm going to go to the future section. And if I'm boring you to death on how kind of rote this process is, let me know. Successful trading is supposed to be boring. So as we had that happening the previous day, we had this yellow peel back happening on the daily yesterday. At the same time, we were at that inflection point, giving it more reasons zero reasons to be short, literally. So now we're at the top of the profile. Nobody in the den cares. Here we go. No comments. We're at the top of the profile on the daily. So it's that bounce, the trading bounces happen. You should be out of at least half of this position. And any daily closes now above 129 or 130, you're going to have to now look at that as support to move higher to explore that fair auction in the weekly more. But, right now, the market, in my opinion, we're going to kind of go back and look at the S&Ps and kind of analyze a little bit before we start talking about this 10-year and what you should actually do. Should you be completely out of this based on a trading bounce of a full handle that's already happened in the 10-year? We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're going to hit crude really quick. Man, horses out of the barn. Talked about this technical damage for the shorts finally getting above 42.6 on the May contract. And I still sing those tunes, the commercials on TFNN at night. Tom is definitely, there's some subliminal image audio type thing going on there. I go to sleep humming TFNN commercials, and I don't understand it, but I'm trying to start to understand it. 42.06, close above the pullback. As you can see, into that neighborhood. We talked about this yesterday. And the daily now, good gracious, 44.49 breakout. Probably going to go back and retest that. You know, I mean, there's a chance, obviously, in anything to do some contra trades against the long-term trend. But when we started having these indications around 29, 30, 31, the XLE, the Canadian dollar, all the other things that were pointing to we may have bottomed here. And now we've really had that profile technical damage. You really haven't had a lot of reasons to look at this from the short side since that low 30 area, right? And blocking out one side of the marketplace at this stage is that short side. You're still looking for support now. The game has changed a little bit here on crude oil. I said that correctly for the first time. And, you know, like Joey had talked about, a lot of times, and you know, one contract of crude oil can drive you crazy. I understand that. But if you're trading a position, a lot of times you'd like to leave on just a smidget to make sure you understand what the core position really should be. And when I say that, smidget long in this case, it's kind of invaluable. A lot of times you'll get mixed up trying to do these contra trades, and it's can get out of hand. Okay, the dark clouds are here. I've had that speech already today. Here we go. Let's take a look at a question we had in the den. And the question is, So when the price moves up above the red profile line and on up, then retraces back down, would you say that the previous red top profile line is a very good support area to buy off of? Yes. Okay, hope that makes sense. All right, so the question is we talk about this all the time, and it's a great question, but when is it appropriate to look for those opportunities? A lot of times we'll surf around the globe, we'll look at a little currency situation, dollar, gold. I have to kind of keep the hard drive full on those instruments back here in my head to kind of get the tone of what's going on globally and how these things kind of fit together. A lot of times I ignore fundamental news stories that are out there and just kind of focus on the technicals and how these price actions are relating to each other. And then that allows me to kind of possibly get a little bit of an edge on relativity and then be able to drill down into the underlying stocks. And a lot of times we don't get a chance to even get into the underlying stocks on this show because these things kind of take precedence early in the morning pre-market. The scanner is going to find those opportunities based on the tone of the marketplace and how you want to filter in the scanner to find those opportunities. But I'll just say this, Joe, who asked this question. Our automated systems, a lot of times buying breakouts, a lot of times you get the high print when a breakout. Oh, wow, I bought the high print. And then we have the pullback after the breakout. A lot of times the automated systems will not buy the breakout. They will wait for the higher probability trade based on a biased opinion that will continue off of that support after it pulls back in the top of the profile. Remember, the definition of these things are, this is a balanced area. This is our buddy the shark in the balanced area. I just made that up. And when we get outside these balanced areas, then you're kind of above the current fair auction, all right? And a lot of times these inflection points, the top of these profiles or the bottom of these profiles, former support, former resistance, now support, former support, now resistance. A lot of times these things will break out and come back and retest, and that's a lot of times the powerful trade. And I'm looking at crude oil right now on a daily. We've looked at this historically. We've done a lot of back testing with it. We said, what if we just buy the breakout? Forget the retracement. If the retracement happens, it happens. And if the retracement happens, significantly and pierces that top of the profile, gets back in the balanced area and starts playing around in there, we get stopped out. So historically speaking, and I kind of cover this, I think, pretty well on a day-to-day basis, a lot of times you'll get, you want the confirmation and the close outside the balanced area. Then if you get that close, because a lot of times, these things will go up and then they won't close right. And a lot of the automated systems will look for that daily close or some significant close outside to verify and kind of put that win on the board that, hey, you know what? Tone has changed a little bit. We might want to look at the retracement. The systems do way better waiting for that retracement after the close because the close puts the stake in the ground that it's okay on a confirmation basis. Yeah, daily close. That's a daily automated trading system, by the way, Joe. But in general, a lot of times that will be the more powerful trade, and you'll be able to kind of play defense better. Because if you're buying these breakouts or selling the breakdowns or shorting the breakdowns or whatever, your defense area, it's almost like you've kind of gone, here's no man's land, right? You gotten out of the foxhole, you climbed the wall, you're in there, and you've gone too far to where your defense fallback area is way away from you. I just thought of this, by the way. And to get back in the trench, you got to run a long way. So why not be able to have your defense trench really close to you to be able to play defense that way? And, that's just kind of the way I look at it. And I hate to put it in military terms, but I always look at each trade. How do I play defense first? So, if we got these breakouts up here, let's just look at crude oil right now. What if we bought the daily close up there? Well, the line of defense is right there, and then you got to place the stops, give them a little noise level right there. Why wouldn't we let this happen and buy the pullback, and now you can play the defense, and your risk-reward scenarios really kind of fall in line then. And we talk about how do you regulate the trade up. We look at these 240s a lot. So, again, just a little bit of an explanation there. And just like the notes here, this is a nice setup. It was to the tick. I mean, why wouldn't we let the market come to us, get to an area where we can play defense efficiently? We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and I apologize for belaboring some points for you guys that are in here every day. I think it's good. It's good for me to talk about these things because it just invigorates my rules-based system in my head, even for myself. So talking about these things it's like daily affirmation. Remember that guy Stuart Smalley on Saturday Night Live? Al Franken. Daily confirmations or affirmations. I think we have Dave from Clearwater. Dave, you there?
John, I'm going to tell you something. Going back to 2009, driving home from work one day late, and I'm flipping through the AM radio stations, like to listen to talk radio. And you talk about getting in your head, and how's this? The moment you flip to the station, well, welcome, folks. This is Tom O'Brien with TFNN. We got 6 hours a day on the radio, 24 hours a day on the internet. Call us at 8, blah, blah, blah. Want to know what's going on in your world? And I was like, man, what is this dude on? It is good stuff. And
it is good stuff.
I was hooked, absolutely hooked. And then I want to say about 4 or 5 months later, however long it was later, he put on a training deal at the Sand Pearl in Clearwater, which is just an absolutely beautiful hotel right on Clearwater Beach.
Cool.
And I'm sitting in the back, right, and Tom's going through the Fibonacci, lightning bolt pattern sequence. And I had to step out, take a call real quick, because my wife never calls me. When she calls me, something's up. You know, and so I got to deal with that. I walk back in, lose my seat, so I end up walking towards the back, sitting down, and I'm trying to figure out, and Tom's heard this story before. I'm trying to figure out what it was I missed, right? So I lean over to the guy next to me, and I'm like, well, I'm sorry to have to ask this, but I've missed a bunch. Can you fill me in on this Fibonacci lightning bolt? Do you have any experience with it? And guess who answered that question? Guess who I was sitting next to? Larry Pezzavento. He looks at me and goes, yeah, I think I know a little bit about that. And he proceeds to give me a one-off 20-minute one-on-one conversation on Fibonacci from Larry Pezzavento. And, that was my introduction to technical analysis.
Wow, man. First thing I'll say is it's very interesting to me how you completely have Tom's intro memorized. That's the first thing that was interesting because you recited.
I drank the Kool-Aid a long time ago, man.
You recited it perfectly. It was very Tom-esque what you just did.
John knows this now, man. I got nothing but love for Tom. Absolutely nothing but love for the guy. I'm a big fan of his. He's just a great person. In addition to being a great trader, he's just a great person, period.
You hit that on the head. What's kind of cool for me is to be able to kind of, just kind of speak to him. He comes on sometimes. I come on his show, and just kind of, bat it around a little bit and get some. We kind of sometimes have different perspectives on things, but it's good to have all these different perspectives on TFNN. I think because what it really does, Dave, for me. I don't know about for you, is it actually slows my trading down a little bit where I kind of, I'm not sitting here looking at all these lights flashing and making possible irrational decisions on something that, I haven't really, kind of looked at from the 30,000-foot view, which TFNN really, the network, gives you, in my opinion.
Oh, absolutely. I agree completely. And if you spend some time, at least on some of the instruments that I like to trade, I like to trade the futures, natural gas, the currencies, the S&Ps, through the futures and the futures exchange. And to make a real long story short, at least with the homework I've done, I've noticed that a lot of the profile support levels come in at 618, 786 retracements, and a lot of the support, inflection points seem to generate at swing points. So it's kind of like a confirmation of what, I basically view TAS profile as a visual signal for what Thomas taught me, and these profile support points seem to come in a lot at what Larry Pezzavento has taught me, and I kind of use it as confirmation because like a lot of the patterns that Larry will teach you, they're leading patterns, and a lot of times when they form up, a profile will be, at least what I've seen on the 240, a profile will get generated within a reasonable period of time and will act as confirmation as where your stop would be placed if you wanted to be aggressive or wait for a drop below, let's say you're shorting it below the unfair low auction as a confirmation. And at least what I've seen, it backs up. So there's a lot of harmony, for lack of a better way to describe it, that I see in that. So I would say to anyone who's listening to, or new to this, wrap your mind around all the above, and also throw in some Steve Rhodes candlestick charting, because that dude's he's a grand poobah of candlesticks. I'm learning a lot from him too, by the way. It's good stuff. No doubt about it.
Yeah, case in point, just what you said about Steve Rhodes and the candlesticks. I was kind of looking. I was kind of referencing him the other day about this soybean kind of runaway freight train and how that kind of peak probably had some kind of candle situation that he would have had some really good insight on. I didn't ask him to cover that specifically on his show, but it, yeah, I mean, I kind of, I consider what I do kind of simplistic, and it, just the profiles, kind of focus on the profiles. That's helped me a lot. It's helped, just black and white, etc. But Steve Rhodes and Basil and Larry and Steve and Tom and David White and Andy Hecht and Daryl Martin on a very smaller scale. Daryl does some great work with Nadex. I mean, it's all good information, and I hope I didn't leave anybody out. But I listened. I have it running in the background all day long because, just like Dave, when I was in Chicago in the Board of Trade, like if I missed a day, I felt like there was a gap in my hard drive, back there. And I could never get it back, just understanding what the pulse of the market was that day, so I could kind of reference that day later in the future. I was like, well, that day it kind of did this, and the notes were doing this, and the dollar was doing this, and so I keep it on and I listen, and that's why the commercials are kind of embedded in my head, just like you know. But
so what you're saying is you drank the Kool-Aid, right?
Yes, I drank the Kool-Aid. I'm hoping we don't go to Jonestown and have a conference there. But
yeah, we'll Tom will be sitting at the top of the chair at the top of the hill, so
we'll try to avoid that one. Yeah.
But yeah, no, I know what you're saying because with the daily miss, because the thing is I'm hoping to work into the point where I can do this full time. I still work full time, so this is like a hobby, but it's a growing hobby of mine, and there's definitely an energy flow, at least what I can see. And
what you just said, like everybody out there, like hobby, however you want to look at it, it's good because I know you've kind of stepped into this lightly and getting more entrenched in it. It's great to gather a ton of information, explore some of these products, see how they act. Get that, demo trading is a lot. I don't know if you're demo trading a lot, but for guys out there just starting, demo trading is not having just a little bit of money on the line just to understand how you're going to act in money situations. Demo trading is like, I can sling it around and yeah. It's not exactly, giving you the experience, the ultimate experience that you need. Dave, can you hang out? We'll get into some rates. Okay, cool. Guys, we're going to get a break, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. I think we still have Dave from Clearwater on with us.
Yes, sir.
Hey, man. So, what else is on your mind? You're looking
I'm trying to wrap my mind around, because unfortunately, John, I, as I mentioned, I still work at a corporation for a living, and I'm not able to listen to anyone's shows 5 days a week, and so I've please forgive me, the Den or whoever else has probably heard you say this about 9,000 times, and are experiencing another round of here we go again. What I'm trying to wrap my mind around is this, John. I'm trying to wrap my mind around, and I think I'm on the verge of getting it figured out, your particular trading system. Just like I spent time learning Tom's, I spent time learning Larry's, and I spent time learning Steve's. I'm trying to wrap my mind around yours, because I think there's a lot of overlay between what the scanner does, as I was saying a minute ago, and what I've learned from Tom, because it's essentially a price volume analysis from the webinar that I saw.
I think so too.
So check this out, man. Here we go.
Okay.
Here's my question, because I don't want to hog all the time like I normally do. So thank you for being so generous with your time.
This is awesome. Go ahead.
So we have an instrument. Doesn't matter. Whatever. Pick one. Aussie dollar, British pound, soybeans, whatever.
Yep.
And we have a change in trend. Okay. And we get our first new profile. Let's say it's been like the British pound. It's been selling off for weeks, for a long time. Boom, we get a change in trend. We get our first new profile generated on the daily. I like to do the dailies. Yep. So it goes above the unfair high. The red line goes above the unfair high, and then we obviously we would want it to, or at least I believe we want to wait for the retracement. And if I understand your policy or your process, we want to see a test of that unfair high, a rejection of that price point, and then that's your cue to then enter the trade on the long side. Is that correct?
Yeah, I mean the powerful trades, i.e. the crude oil kind of break in. Tom's been talking about these commodities kind of even ahead of time of all these breakouts. Something feels like it's getting ready to change here. Then you get the confirmations. I mean, we've been talking. I know you've been watching the show, and we've been talking about, like we talked about earlier this show, crude oil kind of showing some signs, and we're kind of looking at this, blocking out the short side now, and being able to kind of start looking at the dailies at the very least and start catch a bid on crude. We raced into those kind of 41.5 areas, kind of came back, and now we're really getting the weekly confirmations breaking above that 42.06 weekly unfair high, which is all in the scanner on the future section on crude oil. And, that weekly close is a huge, huge deal. But a lot of times, like I talked about a little earlier, not most of the time, but a high amount of the time, you'll kind of wait for these stakes in the ground like that, and then you'll be able to kind of look at the pullback if everything else looks kind of co-sympathetic, to be able to really kind of play that inflection point from a former resistance, now support type standpoint. And, the stuff that Larry's talking about, Tom's talking about on down the line, you can kind of keep that in mind. The profiles have kind of, confirmed that. But I like to find a place where I can completely play defense, and that's like a really good defense-oriented situation. Instead of buying that high print or the weekly close kind of well above, waiting for the retracement. We never really got back down to 42.06. I think we got to 42.50 or something, or 42.49 on crude, just for example. And, if it doesn't come back, then the worst thing is you're not in the trade and you have no risk on. I mean, that's not really a bad thing.
Right. So it seems to me like the when you wait for the profile to get generated, and just sorry to interrupt, I'm trying to keep a minimum amount of time here because I'm burning up all your time. It seems like you block out, in this case, when we're talking about oil, you're blocking out the short side because we have a close on the daily above the unfair high, right? So in your process, that says to John, block out the short. We now look to buy support rather, pull back on support to go long because of the daily. And so that's your process. You wait for a close above the daily, not the weekly, not the 240, but the daily.
Well, there's two things in play here. On the British pound. Let's go back first of all and reference what John from Philadelphia we were talking about. I think it was yesterday or the day before. We both agreed that it was on the bean trade. It has been, especially since we started clearing those weekly unfair highs at 915 and then the pullback to 915. This has been like insane to short this, and for many reasons. He pointed out some great fundamental reasons, but technically speaking, it was kind of okay. He started looking. I think he was 878 or something like that. He was talking about he started nibbling on that 868, something like that. But again, we talked about buying a strangle. Low volatility, that was one thing we talked about. And then you get the technical confirmation. I think it was probably first on the daily, but then the 915 kind of sealed the deal. So
with the follow through on the weekly.
Yeah, so then it's okay, we had the move, we've had technical damage for the shorts big time, and we're completely blocking out the short side. It's not saying, hey, force everybody to go long. It's okay to be long, not okay to be short. And that's really as simple as it is.
Long at that point.
Yeah. Here's the British pound. The reason I don't like to play around with the British pound right now is it's just so news driven right now. I mean, the technical damage is here. That's a fact. But now, if you looking at the chart, this 1.4447 is definitely going to be support on the breakout on the long term. Looks like we might get a weekly close tomorrow above that area. But you could have started nibbling a little earlier here. But again, I'm kind of, the British pound is so Brexit news driven right now. They could come out and, say whatever, and this thing could cave in 500 pips all of a sudden, So I just,
why I got to have a stop.
Yeah. Well, the good news is about the Forex, it's open 24 hours a day, and your stop will definitely get hit. It's not like you're going to suffer a gap down in it. So that's the good news on that one.
So let me ask you something. If I could, is that okay? Can I ask one more question?
Sure.
That being the case, again, trying to wrap my mind around the process, and let me just apologize in advance for the 6 other phone calls you're going to get over the next month or two as I'm trying to catch your shows and wrap my mind around this. Really like the scanner, by the way. I'm really digging that thing.
Thanks.
So that being the case, what is meant by, quote, end quote, 240 is the regulator of the trade?
Well, if we're in a trend like the bean trade, if we're in a trend up, defined trend up, we've got the technical damage for the shorts. It's okay to be long, not okay to be short. A lot of times, I'm going to go back to this bean trade, and we're going to pull it up really quick. And there it is. So on the weekly, we know the deal there. There hadn't been a lot of mitigating circumstances to really get out of the ultra long-term trade. But when we have I tell you what, Dave, we got one more segment here. It's really short. I'll explain this. If you got to go, I understand it.
I got time.
I'll cover it right after the break. Okay, cool.
Thank you.
We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I was just looking at the... Oh, God, my chart's not up. Here we go. Just looking at the XLE and the internals, just looking at a couple of stocks we were looking at before. Dave's still on with us. I'm going to come back to him in a second. SWN, man, on fire. En fuego, as they would say on ESPN. Dave?
Yes, sir.
Okay, great. Yeah, we were talking about the 240s and kind of the regulation of the trade up. A lot of times I'll look at the 240s and use this as my, if I'm looking at a long-term breakout and looking at kind of places to, have stops and things like that, there's the pullback to that daily unfair high. Remember, those dailies or weeklies take precedence over dailies over 240s down the line. So I'll use the 240s as kind of a trailing stop because they expand and they expand and contract based on ensuing perceived volatility. All right, so let me get my chart back up. I've got to learn how to make sure my charts stay up. It's my fault, Al. Again, the long-term trade is still on. But again, for kind of being stingy and being able to kind of be stop-oriented on some of the position, because, when this kind of thing happens, this is, the inflection point we're really, really looking for the market to come back to us. Now, what happened here is we had a yellow peel back on this when this was happening, and then we had the new profile. I'm not showing this in the chart right now. I don't know why that bar's not yellow, but in the scanner, I was watching this, and let me go back to the futures section. When we have kind of a yellow peel back happening, especially on that daily couple of days or a week ago, whenever that pullback was, that's an indication to take some off the table. And the long-term weekly, if you're trading this on the long term, trying to let a fine wine breathe type scenario, like we talked about before, keeping some of a core position on is not a bad thing. So again, blocking out the short side and looking for long opportunities and being able to use this, for instance, like on cocoa right now, yellow peel back on the daily. It means, hey, you know what? We're going to have a new profile. You're probably going to have a lower inflection point to look at as support. You're going to have new breakout areas to take advantage of. And it's just kind of a scale out situation. For guys who are out there trading one contract, it might be a take everything off situation. But the 240s kind of allow me, in most cases, to be able to, orient stops based on breakdowns below those 240 profiles. Yesterday, we talked about short-term support is going to be around $10 a bushel. And that's just the way that's just, and again, this is we've got a big wide 240 profile. There's going to be a lot of volatility here. But again, the long-term trade, there's really no damage or danger to the long-term trade because of the daily and weekly. It's just I like to use these. That would have been a little bit of a situation that you could have used them as a stop out to regulate the trade up. But again, you got the daily kind of yellow peel back, allowed you to scale out of some position already. And then you've got that daily inflection point, which we hit pretty much to the tick, letting the market come to you after you got those indications to look at it as a new support area.
Okay, I think I'm wrapping my mind around that a little bit. Would it be possible, because I don't want to overstay my welcome, would it be possible to call tomorrow with some more follow-up questions?
Yeah, man.
Cool. John, thank you so much for being generous with your time. I greatly appreciate it.
Thanks, Dave. Great questions. Stay tuned for Larry, guys. You'll thoroughly enjoy it. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.